Let's get an early look at what we should be expecting from the local market with Chris Weston over at IG in Melbourne. Chris, great to see you there this morning. Let's start with those Fed minutes because that's what's caused a little bit of movement at the close in the United States. We've seen stocks lower. We also saw movements in gold, in treasuries, and pretty much everything after those Fed minutes. It's interesting to note that they seem to be a little more cautious about the impacts or the downside risks of quantitative easing. Did you read this as perhaps them pulling back earlier than first thought, or was it just a robust discussion?
Well, I think there's a slight change from the language in the previous minutes that we saw in December, which the market really wasn't prepared for, and certainly they acted upon that, and we saw huge dollar inflows on the back of those December minutes. But I think what's changed here is that we didn't see the non-voters, and I speculate that they were non-voters, suggesting that they wanted to see the pace or asset purchases stopped immediately. I think Kansas City's George was probably the one who came with those numbers. But there is definitely a robust discussion about the pace now of quantitative easing. I think that's really the situation. It's more about actually the variance of the pace of buying government bonds and mortgage-backed securities, and they're going to potentially outlay them to different economic scenarios as well, and I think that's what the market's looking at. So certainly at the margin, the minutes we've seen today were more hawkish. Once they came out at 6 o'clock, we did see a bit of movement in stocks. Treasuries were sold off to the tune of about 3 basis points, but they did come back again, and gold continued its slide down. I think what is important to remember, though, is that the market was actually in an absolute free fall into the minutes, and the actual volatility we've seen from the minutes hasn't actually been that great. The volatility going into the minutes was more significant. I mean, euro dollar got absolutely slammed. I mean, I think before we went home, last night when the equity market was open, we were trading around 134. It got down to about 132.75. Aussie dollars come off very sharply as well. Sterling had a big underperformance last night because of the minutes we saw from the Bank of England. 3 members, including Marvin King, talking about increasing the asset purchase program, not overly concerned about inflation further down the line. It's more about trying to get the economic situation going back on. And I think the Kiwi as well hit very hard. There was talk in the market last night about a big commodity hedge fund which was allowed to blow up. And we saw a massive unwind of the commodity trade last night. Gold absolutely slammed, down 3% from where we went home down to the lows of the day. Oil and WTI and Brent and copper and everything fell going into the FOMC minutes. The minutes didn't help either, and I think the S&P closed on the lows of the session, but most of the damage was done going into the minutes. Yeah,
tell us a bit more about this rumour or the reports around this commodity hedge fund. So is the idea that it's about to go bust?
Yeah, I mean, I did see an article in the FT just after that, and one of the editors has done the ring round, and apparently it's nonsense, or he used a different word, but I won't repeat what the word was. So, I mean, we haven't seen any unwind of those bearish positions would have been put on. I mean, if a hedge fund, depending on the hedge fund, whether it was a commodity hedge fund, obviously the speculation here is that they obviously had some very large positions within the commodity complex, which were likely to be unwound as a fire sale situation.
Right.
I just think there's a big difference between hedge funds and investment banks. Investment banks obviously carry big systemic risk if they close down. Hedge funds, because a lot of it's down to investor capital, they put their own capital in, do not carry those same sort of systemic risks that you would get with an investment coming down. Obviously, there's a big difference in size as well. So I just think there's perhaps that there's speculation that perhaps they were sitting on some large commodity positions which would have to be forcefully unwound very quickly.
Okay, interesting. Let's talk about the day ahead here in Australia. We've got BHP. We're going to get some reaction to that result. And you're expecting the market to really slam that stock. Why is that, Chris?
Well, I mean, it's not rocket science. I'm just looking at the ADR, to be honest. The ADR, which is usually pretty accurate, is predicting an open down about 2.6%. I mean, if you look at the commodity trade last night, as I talked about, gold has broken some very, very key levels for me. The 15th of August low, 1590, and also is trading below the low of the downtrend we've been seeing as well. So, that looks like it potentially could go down to 1526. In a pretty short space of time. It's already been hit very, very hard at the moment. WTI and Brent obviously hit very hard as well. And if you look at the S&P commodity sector, the material space, it was down nearly 2%. The FTSE commodity space, the material sector, down to about 2.4% or so as well. So that will, given the moves we've seen in commodities from our close to where they are now, And given what we've seen from other sectors in other key markets, the Canadian market as well, the material sector down 2.3%, you know, it's pretty thematic that we are going to see a very, very weak open for those stocks. You know, it's going to be pretty bad for a name like Iluka, which doesn't have a great lead to come out with today when they've obviously got earnings. You want to be sort of coming out with earnings into a positive market. Now, I think from a headline perspective, we are likely to see the market, we're calling the market to open around 50.67, which is down about 0.6%. Which, to be fair, is actually going to be, if we close below that level, would be the worst day of the year, which is testament to the strength we've been seeing. That you know, I think 8th of January was the worst day that we've actually seen in the ASX 200, down 0.6%. So whether people use this as a buying opportunity is yet to be seen. I'm just seeing some pretty worrying signs coming through in the US market in terms of the technicals right now that would probably suggest that we could, if price determines this, could see a bit more of a pullback in the coming weeks now.
Okay, Chris, but the BHP reaction, you mentioned the ADR down about 2.6%. That's not to do with the result and the leadership change.
Well, I mean, it was down. I mean, the stock obviously was down yesterday in our market.
Yeah, almost 1%, I think.
Yeah, so I think it did have a reasonable open, and it fell away towards the end. I mean, I think the appointment of the new CEO should have been met with good situations. I think, yeah, if you look at Sam Walsh, for example, he came out with a recent speech. I think he mentioned the word shareholder well over 20 times, and I think hopefully that's going to be the same with Mr. McKenzie as well, and there's going to be a change of culture at BHP and potentially reward shareholders slightly more. But I don't think anything dramatic is going to change there. And I think people were looking with inside the actual result at some of the costs and other bits, the cost outs and all those bits and pieces as well. So no, I think just based on, I think the market's already had a chance to firmly react to the results. I think what we're seeing now is just moves in commodity prices that need to be priced in.
Okay, let's take a look at what's ahead in terms of reporting. What are the headline acts, Chris, that you've got your eyes on?
Well, there's no one tier one. It's all, I mean, no offence to the companies, but I mean in terms of market weight, you've got AMP, obviously they've been doing very well, 13% year to date. There's a little bit going on in their wealth management side. We're looking for underlying earnings, 9.49, probably a little bit lower on the net profit side of things, and dividends somewhere, I think, what, 17 cents or so. You've got APN, of course, we heard the news the other day that pretty much all their senior management has stepped down, so hopefully we're going to see some glimmer of signs about asset sales and other bits about pieces, how they're going to address the balance sheets, because their net debt to EBITDA is well within their covenants at the moment, but we still want to see how they're going to address the balance sheet, which is looking stretched and you know, will need to be addressed. ASX, Qantas, of course, came out for really good earnings for the last half, and hopefully we're going to see bits and pieces coming through on that one as well. And we've got Fairfax, and I think Fairfax did come out with guidance back in October. That was the last time we saw guidance from these guys. The stock's trading in a range of 57.50 cents at the moment, so you need a bit of a catalyst there. The SMI data not really giving anything to the bulls to really sort of come in and buy this one right now. So it's perhaps, you know, hopefully going to see some sort of glimmers of lights about Fairfax of the future that may see people look to come in and buy the stock today. But what we are seeing, you know, Iluka, as I mentioned, coming out with earnings, and there's the whole heap more, Emeco. But what we are seeing, so a bit of a weakness on the headline level, but this market is punishing, absolutely punishing anything that's either had a good run and is missing expectations, or you know, is priced to perfection, and is seeing some really good love to stocks that has actually been underloved. So I think from a headline perspective, you're seeing low volatility, but some big volatility within a micro level there.
Okay, interesting. Chris Weston from IG, thank you so much for your time.
Thanks, Kate.
Chris calling the market down about